right? So today we're going to focus on patterns, patterns trading support and resistance, and patterns trading channels. Channels, like I mentioned before, is also a part of support and resistance. Okay, so we're going to start with channels, given that I would have drawn two channels, which would have been a descending one and the ascending one, which we will look at after. Now, the best way to trade channels is using two letters from the alphabet. Two letters from the alphabet, all right? I have seen it based on my research. These letters just keep, you know, popping up every time I look at analyze a channel. I notice that if it's one thing I recognize in a channel are these two letters from the alphabet. And what are these two letters from the alphabet? The first one is a W, right? And the second one is an M. So which one do you use for which channel? So for a descending channel, remember with a descending channel, we're looking for the market to break up to the upside, right? And for that reason, we will be looking for a W. So descending channels, we're looking to trade a W pattern. Could be a lopsided W, or it could be, you know, just as the ones that we have here. All right. A W is also known as a double bottom. W is also known as a double bottom. So in this particular channel that we have here, if you look closely, you will be able to see that we have a W that took the market out of the channel and upward. This is a lopsided W. It's a little stretched up. All right, so the best ways to trade channels is using the two letters from the alphabet, which is a W and a M. All right, so you're always looking to more or less complete the W, this part of the W here to the upside, right? But what is also critical when you're trading the W with the channel is that you must have a break of solid body candle break. Break of trend line. So it must break and close. Must break and close. Right? So you must have a solid body candle break of your trend line. And that's the only way you will continue to hold this trade with the projection that the trade will continue up after there's a solid body break of your channel. And if we look closely, right, we can see that we have our solid body break here. Now, once I get this, for me, I am going to hold my trade, right, to my next target area, which should be up here. Okay, so nice W. We would have gone into the trade somewhere around here, right? Using the entry strategy, we will go through the entry strategy in week week. Let me see when that week is. Possibly next week, depending on how we get through the patterns this week. All right. So we won't deal with entries today. It's just general knowledge of knowing, you know, what patterns we're looking to trade, to get into to trade, what patterns we're looking for to trade descending channels. All right. So let's look for the ascending channel that I had, which is here. We spoke about 2 letters of the alphabet. We spoke about a W and a M. When you're trading the ascending channel now, you're looking for a M pattern, right? Because with the ascending channel, remember, you're looking for the market to break out to the downside. That's the prediction. So the pattern you're going to use to trade the ascending channel will be an M, also known as a double top. That's right. Right? So if you look closely, you will notice in this ascending channel here, we had a nice M pattern. And then from there, the market went to the downside. Now, getting into this sell, again, the same thing applies. If you want to hold it, if you want to know if to hold it as it continues to drop, you're trying to predict whether or not it would break your trend line. You need to have a solid body candle break of your channel in order to know, well, hey, I can hold this because more than likely it will continue to drop, right? So you must have a solid body candle break. Right? This is just to continue the participation. You would already be in the trade completing the M. Because for me, I would have probably gone into this trade somewhere around here. When I saw this happening, for any time I see this, you know, as I say, we're going to go through entries next week or week after. But when I notice that it is a double top, right, I will be looking to get into my sell. So I would have started my sell here, and I would have wanted to continue to hold my sell should I get a solid body candle break of my trend line, in this case, channel. So the best patterns to trade channels with is 2 letters in the alphabet, which is a W and an M. You're going to use a W in the case of a descending channel with the prediction that the trade will eventually break out to the upside. And you're going to use the M with the ascending channel and with the prediction that the trade will break out to the downside. Are we clear? Any questions, queries, comments, concerns? Nice and clear for everybody?
Loud and clear.
How about some of the newer persons? I need to hear from you.
Clear, clear, clear.
Excellent. Anyone else? Okay. All right. So let's now look for some more channels. So we could continue to talk about W's and M, trading the W and M pattern, right? I see some channels, but there are some complicated ones, so don't let me go through those as yet. Given some of you guys are still quite new. Okay. Okay, I think this is okay. Now remember I told you the cheat sheet to channels is using a trend line first. So just use a trend line and see if it will make sense, right? Now, with the trend line, what you're looking for is waves. So to draw the channel, you need to be able to identify waves, whether it's in a downtrend or it's an uptrend. So in a downtrend, you're looking for some waves to happen, and an uptrend, you're looking for some waves going up as well, right? So the whole idea is identifying waves, right? So you can start by just taking a trend line just to validate it or not. For me, this is already validated because I could see some waves here happening. Okay, so from here, I'm going to take my parallel channel tool, right? I'm gonna start from here. I'm gonna bring it over here. My second click, and then my third click here. Now to validate as well whether or not it is a descending channel, like I say, you must see rejection in the middle. All right, we can see some nice rejection here in the middle. Okay, and we spoke about two types of letters that we will trade in channels. So depending on how you see it, because some people may not see what I see, right? What I am seeing here, I'm looking for W because I know it's a descending channel, so I am only looking to get into a double bottom, right? So for me, my W is here, starts from here. We get a nose in the center, and then it comes back down here. Right, and then from there, I get my breakout to the upside, completion of the W. Okay. Some people probably would have seen it from, saw a bigger W. Like I say, how I see it and you see it may differ, but it must be a W. So you may see something bigger where you see this nose here in the center, and then this entire thing down here being your completion of your W. And to be honest, both are right. In this case, both are right. Once you can identify the W, you're good to go. Same, Alex, same. Okay. So we have the W here, right? Like I said, I probably would have gone into the trade somewhere around here. And the only way I was going to continue to hold my trade was based on what just happened here. Was based on a solid body candle break. All right. have a solid body candle break of my channel or the trend line, whichever you prefer, to then give me the signal that we can continue to hold this trade until it reach our next resistance zone. Okay, so this is a clear example of me showing you a W pattern. We would have probably gone in entry-wise around here, and then, you know, continue to hold the trade until you reach your next resistance zone. All right? How are we with that? With that descending channel? Any feedback, concerns, queries, comments? Okay, I don't want to go too much into entries because I just want to make sure that this video solely deals with the type of patterns that we are going to use to trade. Yes. Or you can personal message me. So I can identify another channel. Can you identify another channel? Remember, to identify a channel, you need to see some waves in a trend. Do you see the waves? Do you see a trend? Excellent. The others, can you see a wave and trend? Because only Alex just said yes.
Coach, yes.
Yeah, I can see a wave.
Oh,
Yes.
so I'll make sure that I haven't lost you guys.
Yes.
Yes, coach,
Good.
yes.
So in a case like this, again, if you're unsure, use a trend line.
Top.
The top, and you could also use a trend line for the bottom if you desire, right? To just identify first before you go and apply the tool. So now we're going to get the tool, parallel channel, right? Gonna 3 clicks give you, right? We just did it. I'll go again. 3 clicks. So the first click, channel. The second click, you use to expand the channel, and then the third click finishes the channel. So there we have a channel. Okay, we have a channel here. Now, once we've drawn the channel, we need to validate it. And based on what I would have mentioned in the last 3 examples, what do you need to see in order to validate a channel? There are 3 components. You need to see what? 3 components.
Rejection at the middle.
That's 1.
Support and resistance.
Support and resistance.
Good. Excellent. So you need to see 3 components in order to validate the channel. You need to see support, resistance, and a validation of, and rejection of the middle. Can everyone see that the middle is being rejected?
Yes.
Yes.
Perfect. So when you unmute, just remember to mute back, you know, because obviously we're recording the call as well. Okay. So we can see that the middle is being rejected. We have rejection here, 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 all here, all here, and all here. Good. Goody. All right. Now, looking at the channel, we are going to get in based on 2 letters in the alphabet. This is an ascending channel, so we will be looking for an M pattern. Now, might I add that in this one, all right, let's go through it first. Let's go through it first before I make my point. So I can see two M's, right? I can see one here. Right? And then I can see one from here, 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 and here. Now, guys and ladies and gentlemen, this is 2020. If the market gives you it easy all the time, we all will be multiple billionaires. All right, so don't get too comfortable. You might have 5 channels that you trade that the W's or the M's, you know, really clear, really clean cut, nice break of the trend line, and it continues up. You may also get that one that gives you everything that you need to validate holding the trade, such as M pattern or W pattern, and also a break of the channel or trend line, and then it reverses and goes back up. Now, there is a technique and a trick that you can use to help you with this, and you're going to love it. It is a wonderful, wonderful trick. I love it myself. You're gonna thank me later. Can anyone guess what that trick is? What is that cheat code that you can use to help you in a case like this? If you guess it right, I'm going to be really, really proud of you. Really proud. Really sharp, really proud. No, not engulfing candles. Well, it could be that too, but you also had, you know, an engulfing candle here. Similarly to you had some over here as well.
Could it be the MACD? No.
Could be. However, let me just, before I shoot you down with the ant, let me see how the MACD would have looked on there.
Thanks for that.
You're welcome. Could be. Actually, sorry, let me use the other MACD. My apologies. MACD is not the one that I am looking for, though, the axe I'm looking for, but I'll give you that one if it shows on here. Let's see here. And because it also would have shown you here that you could have sold. This would have been the time to get into the sell as well along with here, but we're not going to focus on the MACD too much here. So is there. Anyone else?
Repeat the question again.
The question is, there is a cheat code that you can use to help you in the case like this, where the trade would have reversed and went back up to the upside. So remember, you are going to continue to hold the trade. You would have gone in here, you're going to continue to hold the trade once you get a solid breaking candle of the trend line or the channel, which you had here.
Head and shoulders? Yeah.
And
I tried.
It has to do with the middle line.
no. So let me see so I'm going to give it to Alex. I'm not going to give it to Alex. I mean, Alex is going to be the last One that is it when the push breaks the trend line? No. Right? It is a wonderful cheat code, and it is called proper risk management. There we go, back to the basics. Proper risk management, because for me, right, you know how I feel about 20 pips in profit, or even when I get the solid break of my trend line, right, because I'm going to continue to hold it as it continues down. Here, you would have placed your stop loss at break even, or you would have at least moved your stop loss to be tighter. So it's to avoid you from losing so much money, because some of you would have gone into this solid break and just decided, you know what, this is going to go to my next support, you know, I'm going to just let drop, yippee. But things like this helps keep you on your toes, and I don't want you guys to get too comfortable. I believe usually when you get 20 pips in profit, you start to tighten your stop loss, or you move it to a break even. Right? Either one or the other. But if anybody guessed that, I doubt it very much. The word we don't like to hear, which is proper risk management. Somebody can say, oh, I was thinking that, but okay, all right, cool. Good. So, but this still, oh, let me just tick off this here. Here we go. This still was a very nice trade. And I tell you guys, even if you're knocked out of a trade, does not necessarily mean that the pattern, or you know, the pattern is lost, there's no hope with it, or you should get rid of it, or is, you know, is completely invalidated. No, it does not mean that. It just means that it was not ready for you at that present moment in time. Doesn't necessarily mean that it was invalidated, because it is still validated here. So some of you on this call, right, some of my students, I know my students very well, not going to call any names, would have been in this trade, got knocked out here and saw a strong candle going up and say, see me, and you're going back into that trade and leaving that alone because that trade moved like polar. Sorry, pause so that the person could have unmute themselves and fight for themselves. All right. So like I said, it doesn't mean that, you know, that the trade, the pattern, or whatever is invalidated. Kathian, call out your sister. Call out your sister, girl. She would have said, nope, not getting back into that. That moving bipolar, I don't like it. So I'm going to leave that alone. Kathian, call out your sister.
I'm not saying a word. Leave me alone. You're going to get me in trouble.
All right. So it doesn't mean that it's invalidating, because you would have told yourself, you know what? Let me leave out this trade. And then here we go. If you step away, you know what's like when you were studying for exam or you just complete an assignment, they always tell you once you've completed it, so at completion, you shouldn't submit the same time. Give yourself a breather, maybe sleep on it overnight, and come back the next day and just have another browse through with fresh eyes, right? And you will notice that you may have read it, you know, countless times when you've completed it, but then when you go to sleep and you wake up the next day, you read it again, you find a few errors or a few things that you should have changed. right? She could feel the eyes. Okay. Wait. Right? It's the same thing with trading. The same thing applies in those days. Everything that we have been taught in terms of, coming up in school and stuff like that, those principles, those key principles that we would have been taught by our parents, by mentors, by guardians, by, older persons as well, they all come back and they all apply here in trading. They actually apply in a lot of things that we do in life, but it's how you set your mindset to see it, right? It all apply risk management. We've been taught that in school, guys. We've talked about managing our money, right? You may not have been taught how to multiply it, but you've been taught how to manage your money, and it still plays a key role when it comes to trading. We've been taught how to, when we're doing an assignment, step away, come back, you refresh your memory again, and come back and browse through it again. Same thing applies to trading, right? If you lost this trade, please, first of all, do not stay glued to the trade, to the screen, trying to understand what's happening here, and then also say, oh, I see an engulfing candle, I can see a strong candle, let me get going for my buy. And then you end up making a lot of silly mistakes. Step away for 5 minutes, 10 minutes, an hour, whatever, and then come back and look at it again. Do not give up on it, because a lot of these patterns play out. It's just that the timing that you enter may not have been the right timing to enter it, right? But what it meant was that you was probably either too early or too late. But they play out eventually. So what you need to do, and sometimes it's invalidated, which is fine, because the market is always not going to always go the same way 100% of the time. But what you need to do is to not give up. When you decide, if this was goal and this did this, and you say, I'm done with goal, I can't take goal because goal, is bipolar, and it's do this thing and it's do that thing and it's do the next and the third thing and divorcing goal. What you're really doing is giving up. And you may not actually recognize it, but what you're actually doing is giving up. And to be honest, I practice a lot of my trading skills. I practice a lot of, my peer studies on peers that I do not like, that I constantly feel defeat me. And I constantly feel mess up my trading account and stuff like that. Those are the peers I spend a lot of time with. You know why? Because you're training yourself to be stronger. You're training your mind. You're training your mind to be stronger when it comes to seeing things in the market. And that's truth. It's like COVID. Trading during COVID was challenging for some people, a lot of people actually, because we've never experienced such market conditions before. But coming out of COVID, nobody that has started learning how to trade with me at the beginning of COVID up until now can say that they're in the same place that they would have been when they first started pre-COVID. Nobody. Even people that joined us last week. You cannot tell me that you're in the same place that you were in, pre-COVID. Because what that market condition did was that it made you stronger, because we were experiencing things that we've never experienced before, right? And it caused us to use our analytical skills and figure this out together, because we were not giving up. So when you feel defeated by a peer like this and it goes back up and it hits your stop loss, don't give up on it. Work on it, because that is going to help you to be stronger when it comes to dealing with similar situations and similar setups like this in the future. You will have your aha moment. I saw this already. This happened to me back in October. Right? Back in October, I was trading this and it did the exact same thing. So I'm gonna wait again. I'm gonna step away from the computer, go and get a glass of water, and come back with some fresh eyes and look to see if I identify my double top again before I get into the market. Right, so the key for that, guys, is not to give up. Please do not give up. When you feel a little defeated, or you feel that every time you go into this particular trade, it hits your stop loss, that's fine. That's fine. Use that pair to help build your skill set. And then eventually you're going to realize, you know what? This pair actually isn't bad after all, because, you know, I have now trained my mind, and, you know, in how to deal with difficult pairs and how to deal with difficult conditions, like COVID and elections. And a lot of you guys are not going to trade elections for the first time. I will. You don't know how the market is going to react during the next couple of weeks, months, and so on. So this is going to be a first for you. But this is time that we build momentum builders. All right. So I don't want to continue to rant because it could go forever. So we have another double top here. We got nose in the center, right? Double top. And, you know, in a case like this, probably would have gotten into the trade somewhere around here. And when I got my solid, because this is a clear, there's no going back here when I see this. You know, if from here the market decide we're going to have a very big candle back up in here, I'd be surprised. But it's not impossible. But this is a clear, solid breaking candle of my trend line. So this would have given me the indication to continue to hold my trade to the next zone. Yeah. So Alex is asking, so the takeaway in placing breakout trades for the channels is to put a tight stop loss when, yes, when at least 20 pips in profit. I don't always do a break even at 20 pips in profit. I like my break even 25 to 30 pips in profit to give the market a little room, right? Because you don't want to be too close to the market. You need to give it room to pull back and breathe and do what it needs to do before it continues. So for example, you know, you can see how the market came back up here, you know, and did a bit of a pullback before it continued to drop. So I like to give the market some room, right? So, but you can do a tighter stop loss, or you could do a break even, your preference at 20 pips in profit. So let's say, for example, I entered my trade here, right? And my stop loss was somewhere around here, right? When I got this break, I would have brought my stop loss somewhere either here or just a little lower than there. So not directly break even, but just tight to my entry. For me personally, that's my personal preference. Until I get this solid breaking candle, and once I get that, I know for sure that candle there, you know, it would have to take a good, you know, some type of market condition to take that right back into that channel. And at this level here, I would have bought my stop loss even a little past my break even within the bottom half of this channel. All right, so today what we've learned about, we started the introduction to patterns, introduction to M's and W's, and we've learned how to trade M's and W's in ascending and descending channels. Okay, you know, we're going to look at entries and so on for M's and W's and so on, and other patterns, you know, next week or week after, depending on how we get through the patterns this week. And then, you know, the week that I'm really looking forward to, that's going to really excite me, is the week that I have titled Tying It All Together. That's when it becomes really beautiful. You know, putting everything that you've been taught in the course of this boot camp, and being able to tie it all together, and, you know, have a more open mind when trading the market. Right? So this is where I will end the recording for this particular one. So I'm just going to end the recording for the introduction to the patterns, and tomorrow we will then start to look at head and shoulders. So normal head and shoulders and inverted head and shoulder patterns. So you guys can also look up for that as well.